What if I told you that paying your rent on time could soon help you qualify for a mortgage? What if I also told you that paying your cell phone bill, your electric bills, and even your banking habits can help boost your credit score? Well, that's exactly what's happening. Right now, I've been following this very closely because this is the biggest change we've seen to credit scoring and mortgage qualification that we've seen in decades. This can help millions of future homeowners who have simply been locked out of mortgage qualification because they don't have a traditional credit history. So let's talk about what's changing, who's going to benefit, and what you should be doing today. So let's first talk about the old system. The old system for years has relied on credit cards, auto loans, student loan debt, mortgages, and personal loans. So what's wrong with that? Well, what's wrong with that is it really doesn't look at the entire picture. There's a lot of responsible people who don't have these type of traditional loans. People that pay their rent on time. Think about people who may be retirees or even people who are immigrants. Also, there's a lot of responsible people, students, people that are just starting out who are paying their bills on time, and that has not factored into their credit score at all under the old system. So what's changing? The mortgage industry is now transitioning to newer scoring models, such as FICO 10T and VantageScore 4.0. These models are designed to take into account a more full picture of a credit history. So what does this mean? This means that they'll be able to factor in rent payments, utility payments, banking habits, and a lot of other things that they have not factored in the older model. So what this is going to do is it's going to create opportunity for people to get mortgages that are still responsible paying people, and they'll have an opportunity to use that credit to their advantage to qualify for a mortgage. So another one of the biggest changes is now they're going to start looking at trending data. In the other models, it simply took a snapshot of what your credit was at a certain point in time. But now the FICO 10T model can look at your data up to 24 months and looking at the trends. Have you been paying your bills on time? Has your balances of your credit cards gone down over time? What are your habits? It's not just a picture of a point of where you are now, but it's looking at the point at where you're headed. So who's gonna benefit? The people that are gonna benefit the most are first-time home buyers, people that maybe have a thin credit file, self-employed individuals, people that are avoiding debt, and people that honestly are responsible people who are paying their bills on time, and that's never been factored into their credit score before. So what does this not mean? This doesn't mean that bad credit items don't matter. So if you have a bankruptcy, if you haven't been paying your bills on time, those type of things are still going to affect your credit score. But if you did not have any traditional debt and you are now trying to get a home, all of the other things you've been paying for over time will now factor in your benefit, and the banks can look at those trends and make a qualified decision. What can you do right now? Well, here's my advice. Don't miss a rent payment. Make sure you're making all your credit card payments on time. Be careful with your bank balance. Don't have any overdrafts. Also, don't run up your credit card bill balances. Try to keep them paid down and don't run them all where you're maximizing out your credit. Also, start planning now. Since they're gonna start looking at trends, start these habits now. If you're looking to buy a house in 1 to 2 years, start now. Don't wait till 6 weeks before you buy. In conclusion, this is a huge shift in the way credit is looked at. In the old system, it was only rewarding people who borrowed money. Now, it's gonna reward people who manage money responsibly. So this can be a really huge benefit to those of you who are just starting out, don't have a credit history, and really want to buy a house and have been running into these roadblocks along the way. I personally think it's a very substantial difference, and it's also something that is long overdue, because looking at the entire picture gives you a better idea of that person and their ability to pay. So this is going to be something that's going to be great going forward. It is not something that is in effect right now. They're just starting to roll it out. Some of these things are going to be on a bank by bank basis as they choose to adopt them. And we're going to expect rollouts through the end of 2026 and into 2027. If you have any questions on buying or your mortgage qualification or anything real estate related, please give us a call. If you like this video, like and subscribe, and we'll see you on the next one.